Hi everyone, this is Terence Tan, the Impossible Investor. I just want to give all of you a market update over here. All right, the Fed did two emergency rate cuts in the span of almost 1 week over here. One during the week, all right, and one over the weekend before the start of markets today. Now, what we're seeing right now is two limit downs in what we call the pre-market openings. So the last time it happened over here, all right, the market or S&P futures actually limit down, which simply means that nobody can sell, right? But people can actually buy, all right? But what we see over here was it was flatlined all the way to the US market opening, and it led to a trading halt on the opening as well for 15 minutes before market resumed. Are we going to see that happening today as well? All right, we have seen it flatline again for a little while now. Will there be any buying or change of sentiments about the interest rate cuts before the US market opens? Nobody really knows. We probably have to wait for the Europe to come in, check out the sentiments, but everything is pretty negative right now, which is why not perhaps only me, but many people are actually telling you the bottom has not reached yet. Yeah, right. And I'm jolly well you're sure about that as well. Yes, it is time to do a little bit of bottom fishing, bottom hunting over here, but not in big chunks as well. Yeah, right now, and more so, after a Friday big update, it's probably not the best time to do any bottom fishing when markets have a big surge upwards over here, right? So any rally right now should be opportunities to sell into, and every major dips is probably where you can bargain hunt if you actually have a long-term view in focus. Yeah, right. But remember, the quantity sizes should be really, really small as well. Now, I just want to provide a quick market update in terms of a logical thinking of why we have not seen the bottom in this market yet. Right? That's because over the last 10 years, what we've seen in the build-up over here is what we call the passive money investing. All right, now passive money investing simply means money that's put into unit trust, money that's put into what they call mutual funds in the US markets over here. All right, they are all put into mostly ETF funds and many other passive ETF, different sector funds that has been built up and getting popularized over the years as well. Now, can you imagine what's happening to those investors right now? Yeah, they're probably feeling just like you and me right now, which is they're sensing a little bit of fear coming into the market. So many of them who have done well, invested long for a really long time in these ETFs over here will probably be thinking of doing some redemptions. They may not be redeeming all, but they'll probably be thinking about redeeming some or parts of it. Now, what's going to happen over here is when these investors actually do what we call redemptions, right? Then it means that the funds will have to go and sell off some positions over here, right, to make some liquidity for these redemptions and to pay these investors off, right? Now, so when they sell off the ETF over here, what do you think is going to happen? Right now, so if it's a fund over here that's predominantly comprising of the SPY ETF, for example, right now, so when the SPY ETF is being sold off, right, to meet the redemption requirements, that ultimately means that the index will be going down. Yeah, right. And when indexes go down over here, that simply means the index component stocks will have to go down as well. Now, so this is probably why we see a lot of selling that's going on right now, and we are basically saying it's not the end of things. Right, and what we're also seeing right now is the trend in the market has brought the volatility index to a really, really high level. All right, and most of the time we see volatility hits a spike and then comes back down. But now we're actually seeing it sustained way up there for almost the whole of last week. Right, where it's basically slowly creeping higher and higher because there's just so much uncertainty right now. Right, even gold is being sold into, even bitcoins are being sold into. All these what we call safe havens over here are actually being sold off to meet liquidity needs over here. Yeah, all right. We all know that it's a danger hedge, but what's happening right now is as well, people have liquidity needs. So, if they have margin calls on their stocks and stuff like that, they will probably be selling their golds, which is making money. Our fund managers will be selling components of gold over here, right, to meet the requirements to pay off, these margin debts over here. So that's why we're seeing, across the board, there are days where actually everything is being sold off. All right, now, so having said that, we'll still go into the charts. We'll take a look at some opportunities that we can perhaps go into opportunities where we see a bounce and we may lead to some short-term opportunities on the short side. And if you're looking at bottom fishing, what some of the stocks over here that can look at bottom fishing in the long run. All right, now, so I'll see you on my computer screen in a short while over here.
Right, hi everyone. Now, so we can see on my screen right now, the S&P 500 futures is still under limit down situation right now. So market is still not bounced up since it's achieved the limit down for the pre-market opening. This is basically erasing off half the gains that it made on closing on Friday over here. As we can see on the screen on the right hand corner, markets went up by about 230 basis points, not basis points, 230 points on the index, and now it's lost back about 128 points on the futures basis over here, right? And as we can see, Europe is probably going to open weaker as well because of what Fed did in terms of lowering the interest rates and causing more fear to go into the market. Having said that, all right, now I just want to highlight a quick opportunity to many of you as investors over here. All right, now what you know from my previous videos is we have a screener built in for our investors, right? And our screeners right now are pouring a lot of undervalued or safe pricing blue chip stocks. But as I said, you have to nibble on them until we see a bottom, because trying to get in too early over here isn't going to be an advantage to your positions. Right now, but one thing that definitely brings up to attention over here is Prudential. Yeah, right. Okay, Prudential, if you see on our click through on the chart, I've just widened it out to a 5-year time period over here, right? And what you're seeing right now is Prudential trading at what we call the 5-year lows, right? So we had to go back all the way to the start of 2016 to actually see the prices that we're seeing right now on Prudential. All right, and on top of this, all right, if you're just thinking about purchasing the shares outright, you're spotting about 8.3% dividend return, all right, just by buying the shares today. Yeah, all right. Now, so your only thought process is really to think about right now if you're going to be a long-term investor, if Prudential is going to last this crisis period over here, all right, and if it's going to come out without any major issues like what we've seen during the financial crisis, then everything is going to get better. Right, because throwing out a 8.3% dividend return is definitely on the higher side, right, of what we call the inflation hedge, which is usually around the 3% mark. Now, so having said that, if we actually see a drop back down of the dividend return back towards a 4% level, that would actually take the stock price 2 times upwards, right, to actually achieve that feat over here. Right, that means we actually see the stock price rebound from near $50 levels back towards the $100 levels. Yeah, right, just to achieve that 4% dividend return, right, which is probably a more normalized return that you get from insurance-based stocks over here. Right now, so that is just that one long opportunity that I want to highlight over here. Let me quickly go into the markets as a whole. Now, one of the reasons why we're still in what we call a correction phase right now, we're still, not officially in a full bearish market. That's because on a longer term basis, right, we have not hit the emergency buttons yet because the 10-year uptrend that we're seeing right now, right, is kind of, hanging by the thread. Right, hanging by the thread, because if you see what we have over here, which is a 200-week moving average line, what you can see is since it broke above the line on back in 2010, yeah, all right, it has multiple corrections move over here back towards the line, but each time it hit the line, it actually bounced back off it. Right now, so right now we are actually at the breaking point. So if we actually get a week where the S&P 500 closes below this line and is no longer touching but a full close below, right, this is where we would actually be witnessing further sell-off, right, which may rival towards the 2008-2009 crisis over here. Of course, as we can see, a lot of governments out there are doing whatever they can to stem that from happening, because that's the last thing they probably want amidst the fear of the COVID-19 over here that's ongoing. So whether it's going to take the market below those lines is going to be left to be seen. So this is one of the main reasons why we say never to jump in too early as well, right now. But one thing that has kind of what we say sold off over here, but the fear has not really built in, is really in the idea of the technology sector. Right, so if we look at the XLK over here, right, the technology ETF actually had a humongous bounce on Friday, all right, trying to catch up for lost time in terms of the fear selling off as we see throughout the week itself. Right now, what really caught my attention over here is really Microsoft, all right, because yes, Microsoft fell from 190 down like most of these stocks over here, but what you see over here, it's comparing to what you probably see in terms of most of the other technology stocks is still pretty much muted in terms of the selling. So if you're looking for short opportunities in technology stocks, Microsoft is definitely going to be one of them, right? But this is not the time to go short on the actual stocks itself in the markets because of the volatility, right? Imagine if you went short over here on, for example, when you caught this wave, you think it's going to be a technical break over here, and you start shorting at 145. All right, it would have killed you over here when it did the bounce up on Friday's closing. All right, so what we want to do over here is we want to make use of option strategies to achieve this, all right, where we can cap our losses over here and minimize the risk that we take while we're trying to pursue big gain opportunities as well. All right, now, so if you are not trading options yet, you really want to find out how. If you'd like to join us, do come down to one of our upcoming sessions nearest to you, and we can show you how to do this amidst the current market conditions as well. All right, and why there are so many great opportunities out there, even despite the market's fear is all going on. They're scaring and spooking a lot of investors. Right now, so again, I'm going to sign off here. Is another limit down day amidst the Fed emergency cut, the second one in 2 weeks. We are effectively back to almost 0% interest rates right now to provide liquidity to the financial sectors as well as companies. Governments move over here to ensure liquidity is available. Whether it's going to hold the market up and keep the long-term bull intact, we're going to see at the end of this week what's going to happen, right? But for option sellers, I think this week it's actually going to be one of those times where we look for some opportunities to establish some option sales over here. All right, so graduates over here, perhaps keep a lookout for some trades I might be issuing out soon. And for the rest over here, stay safe. Don't jump in too early. And I'll catch you in my next update. All right, this is Terrence Tan, the I'm Possible Investor, signing off for this market update over here.